Are you ready to start investing but feel overwhelmed by where to begin? Subscribe the Entre Growth Lab for more contents. Don't worry. Investing is simpler than it seems once you understand the basics. With the right plan, you can build your wealth over time, even if you're starting with a small amount of money. Let's break down a step-by-step investment plan for beginners. Start with a clear goal. Before you invest a single dollar, ask yourself, why am I investing? Your goal might be to save for retirement, buy a house, or simply grow your wealth. Having a clear purpose helps you choose the right investment options and timeframes. For example, short-term goals. Prioritize safer investments like bonds or high-yield savings accounts. Long-term goals. Focus on stocks, ETFs, and other higher growth options. Build an emergency fund before diving into investing. Make sure you have an emergency fund. This is your financial safety net, covering at least 3 to 6 months of living expenses. Having this fund in place ensures you won't need to pull money out of your investments during unexpected situations like medical emergencies or job loss. Tip: keep your emergency fund in a high-yield savings account for easy access and some interest growth. Start small, but start now. One of the biggest myths about investing is that you need a lot of money to begin. The truth? Even $50 or $100 a month can make a difference thanks to the power of compounding. Compounding is when your money earns returns, and those returns earn more returns over time. The earlier you start, the more time your money has to grow. Example: if you invest $100 per month with a 7% annual return, you'll have over $120,000 in 30 years. Small steps add up. Understand risk and reward. Every investment comes with some level of risk. The key is to match your investments to your risk tolerance and financial goals. Low risk, bonds, high-yield savings accounts, or certificates of deposit, CDs. Medium risk, index funds, mutual funds, or ETFs that diversify your investments. High risk, individual stocks, cryptocurrencies, or speculative investments. As a beginner, start with lower risk options like index funds or ETFs. These allow you to invest in a broad market, reducing risk while still growing your money. Set up a consistent investment schedule. Consistency is the secret to successful investing. Set up a regular investment schedule, weekly, monthly, or quarterly, and stick to it. This strategy, called dollar cost averaging, allows you to buy more shares when prices are low and fewer when prices are high, reducing the impact of market volatility. Automate your investments if possible. Most platforms allow you to set up recurring deposits so you don't have to think about it. Diversify your portfolio. Don't put all your eggs in one basket. This classic advice applies perfectly to investing. Diversification spreads your money across different asset types, industries, and markets, reducing risk. Include a mix of stocks, bonds, and ETFs. Consider investing in different industries like technology, healthcare, or energy. If possible, include international funds to tap into global growth. Diversification ensures that if one area performs poorly, others can help balance your returns. Starting your investment journey can feel intimidating, but remember, every successful investor started as a beginner. The key is to take small, consistent steps and stay committed to your goals. Build your emergency fund, start with low-risk investments, and keep learning along the way. Your financial future is in your hands. The sooner you start, the more time your money has to grow. So, what are you waiting for? Begin your investment journey today and take control of your financial destiny.